In late January 2025, Chinese startup DeepSeek announced a free generative AI tool to rival other major players in the market, but at just a fraction of the cost. The announcement sparked a widespread sell-off in global markets. ETR reacted quickly to the news with a flash survey intended to capture reactions to the announcement of the DeepSeek-R1 large language model, or LLM. The survey analyzed organizational adoption of AI, awareness and evaluation rates of DeepSeek-R1, perceptions of its capabilities, and the potential impact it might have on AI investment strategies. Findings reveal a mix of interest, skepticism, and caution as companies sprint to assess DeepSeek-R1's value against proprietary LLMs like OpenAI and Anthropic's models. The survey gathered insights from 106 IT decision makers, about a third in C-suite positions and nearly half in other senior leadership roles. The respondents were mostly from North America, 71%, with another fifth of the respondent pool from the EMEA region. More than half were from large organizations, and a variety of industry sectors were represented. To ensure participation from qualified respondents, all had responsibility and visibility into the AI and machine learning aspects of their organization, and all stated that they were either very or extremely familiar with their organization's use of LLMs. Of those surveyed, 80% reported that their organizations pay for subscriptions to tools like ChatGPT or Microsoft Copilot to assist teams with their work. Another 63% stated that they integrate LLMs into proprietary applications and workflows using APIs or web services, such as OpenAI's models or Anthropic's Claude. A smaller proportion of 39% indicated that they leverage open source models to build and deploy LLMs on their own computing infrastructure, and 27% said their organizations are training proprietary LLMs in-house, demonstrating a commitment to developing custom AI solutions. These findings indicate that while most organizations rely on commercial LLM subscriptions, a significant portion is investing in custom integrations, open source models, and even proprietary LLM development to meet their specific needs. Specifically inquiring about familiarity with DeepSeek's AI model R1, the sample skewed towards less familiarity with the tool, with 31% aligning that way versus 23% aligning towards some degree of familiarity. Most respondents were neutral in this analysis, with almost half ranking their familiarity with DeepSeek-R1 on a 3 on a 5-point scale. This survey also assessed organizational interest in testing DeepSeek-R1, an open-source large language model, LLM, that can be installed and run on personal computing devices. Unlike cloud-based LLMs such as ChatGPT, DeepSeek-R1 claims to offer an advantage of operating on lower-cost hardware while reportedly outperforming OpenAI's O1 model on various performance metrics. This question revealed that collectively more than half of respondents showed interest in evaluating the model. This is those who ranked a 4 or 5 on the 5-point scale, with 35% indicating that they are extremely likely to test DeepSeek-R1 within the next 6 months. Just 16% said they were not at all likely to test DeepSeek-R1. Overall, there's clearly a significant level of interest, but a meaningful portion of respondents, 29%, remain to some degree hesitant, which is an underlying theme we explore further in the remainder of this survey. Now let's dig a little deeper into the feelings respondents have about DeepSeek-R1, focusing on its cost efficiency, performance, accuracy, and data privacy compared to other LLMs in the market. The results reveal a mix of optimism and skepticism here. For instance, most respondents believe DeepSeek-R1 will substantially reduce integration costs, with 65% agreeing to some degree with that statement. More than half, 57%, agree that DeepSeek-R1 offers performance near equivalent to OpenAI, Meta Llama, or Anthropic Claude. Collectively, just more than half, that's 51%, expressed either neutrality or some degree of optimism regarding DeepSeek-R1's reported performance, and 48% were skeptical about performance claims, so it's about an even split there. Confidence in DeepSeek-R1's accuracy skewed more pessimistic, however. While 26% of respondents somewhat or strongly agreed that the results from DeepSeek-R1 can be trusted as accurate, 36% were neutral, and 32% disagreed to some extent. This shows a notable level of doubt compared to more established LLMs like ChatGPT. And then when it came to trusting DeepSeek-R1 to handle data privacy as well as ChatGPT, there was a clear skepticism of DeepSeek. Just 9% agreed to some extent that DeepSeek could handle data privacy as well as ChatGPT, while 64% expressed some degree of skepticism. This wide disparity suggests privacy concerns will be a key barrier to adoption for the vendor. Of the total survey population, more than half, 52%, stated that the release of DeepSeek will not impact their plans to build or invest in AI capabilities. However, 25% said that DeepSeek will enact a change in their plans, and 23% were still unsure. Respondents who answered yes to this, that was 25%, to whether DeepSeek-R1 would change their approach, provided open text responses for further explanation, and then ETR coded and grouped these several responses into key trends, which are shown here. The most cited impact is cost savings, with nearly half, that's 44%, indicating that DeepSeek-R1 lowers AI implementation costs, making it a more viable alternative to proprietary models. 22% of organizations are taking a cautious wait-and-see approach before committing resources to further AI adoption. Tied at 19% were those who said the release of DeepSeek-R1 would change how they do testing and comparison, that it would lead to increased competition, and that it would spur new use cases. Self-hosting and data privacy, at 15%, fell in line behind those impacts. Inversely, ETR's survey examined why some organizations do not plan to change their AI investment strategies in response to DeepSeek-R1. This shows the coded open-ended text responses from the 52% of respondents who said DeepSeek-R1 would not change how they invest in AI. The most cited reasons for not adjusting AI investment plans were concerns over data security and privacy risks, and the desire to stick with existing plans. Continuous evaluation was a reason for a fifth of respondents, followed by commitment to other vendors and skepticism about DeepSeek's claims. Not shown here, but ETR also captured open-ended responses for the 23% of respondents who indicated they were unsure of the impact of DeepSeek on their AI investments. These unsure respondents primarily cited the need for more time, evaluation, and testing before making investment decisions. Security, privacy, and cost concerns were also causing hesitation for this unsure group of respondents. And so this suggests that if DeepSeek's R1's performance, governance, and broader adoption evolve, these perspectives may shift. And lastly, ETR examined how organizations view broader AI investment strategies, cost considerations, and the potential impact of DeepSeek-R1 on their decision making. Most respondents agree that if AI tools were less expensive, their organizations would invest more heavily. More than two-thirds of respondents somewhat or strongly agreed with this statement, highlighting cost as a key limiting factor in AI acceleration. That number jumped slightly higher to 72% when isolated to just the C-suite respondents in the survey, too. Just more than half agreed that they would not change their AI investment strategy due to DeepSeek-R1, suggesting that many companies remain committed to their existing roadmaps despite the new model's release. 51% of organizations indicate they would continue using pay-per-prompt models like OpenAI's, seeing them as easier to use and integrate than open-source alternatives. And inversely, more than a third, 36%, said they would stop using web-based pay-per-prompt models. The takeaway here then is that pay-per-prompt models are still expected to maintain continued usage despite the onset of DeepSeek-R1. While a third of companies agreed that DeepSeek-R1 is likely to cause a significant reevaluation of their AI investment strategy, a larger 43% disagreed with that statement to some degree. A third of respondents agreed that DeepSeek-R1 makes them more likely to explore building their own AI applications too, possibly demonstrating interest in greater customization and control. However, 39% disagreed with that statement. And asked whether organizations would be planning to pause their AI projects to learn more about DeepSeek-R1. Almost half of respondents strongly disagreed. The total percentage of disagreement with this posted statement was 73%, and that number jumped to 84% when isolating two C-suite respondents. So even though DeepSeek has certainly been disruptive in the industry, it is largely not causing organizations to completely pause their AI journeys to see how things play out. And that wraps up our look at the DeepSeek Flash survey we conducted in February 2025. At ETR, we're constantly monitoring the pulse of enterprise tech with insights backed entirely by end-user data, not opinions.